Everyone, it's Kyle Daniels with Erickson Beach Real Estate, and this is our last video of the year. Thank you for all that have watched this year. It's been fun, and hopefully you've learned some things. Today we're going to talk about 2017 and look at a year in review sort of thing here. Big question I want to answer is, are we in a bubble? And the answer is no. You know, we've had a lot of price appreciation. It's gone up in some cases over 50% in some markets here in the South Bay. But if you look at it compared to our last peak, housing affordability is actually better than it was. We're about double. We're around 20-25% affordability, and compared to about 10-12% before. While it is expensive, rates have been low, and that's kind of kept this market alive for a lot of people. For sellers this year, one thing that's been really great is days on market has dropped across the board. Whether you're El Segundo, Hermosa Beach, PV, all homes are selling quicker this year. In the lower markets where prices are under $1 million, it's crazy. Things are selling in less than a couple weeks in most cases. Plus, 60% of the homes on the market this year have sold with multiple offers, 30% over the asking price. So those are all great things if you're a seller. Kind of tough if you're a buyer, but one thing that's been great is interest rates have been low. As far as appreciation, our winners this year, ding, 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 Manhattan Beach has definitely been over double-digit price growth this year. Average homes around 2.8 million. When we look at further down the bay here, Hollywood Riv has been almost 20% price appreciation. I think people have discovered that you can get a nice home with an ocean view and not have to spend over $2 million. Other areas are Torrance and Hawthorne. In fact, LA Times just had a whole thing about Hawthorne and the new growth going on there with SpaceX. They call it the halo effect of SpaceX. In terms of buyers, it's been a tough year, but again, rates are low. We're still under 4% on average. And when we look ahead, it's a great transition into what's going to happen in 2018. We can see that interest rates are expected to go up about 0.5 point. That will have some effect, but I don't think it's going to kill this market. Some other things we're looking at 2018, the effect of tax reform. We do know that it's about to pass. The president's going to sign here hopefully pretty soon. What's the effect? Everybody's wondering. Well, hopefully with job growth and GDP growth, we're going to see everybody, the heydays are going to be back. America's going to be great, as the president likes to say. But what that means for real estate is I don't think it's going to have a huge impact. I think supply is the #1 driver that's keeping this market in check. A lot of boomers aren't moving. They don't want to pay the capital gains, and they don't know where to go. That reduced supply is going to continue pressure on the prices upward. I think the rising interest rates will have a little bit of a downward push on that. In terms of taking away the incentive to buy a home, I just don't see it. I think home ownership is always going to be something for those that are going to stay in one place, especially if you're raising a family. You're building equity. When you're paying rent, it's going to the landlord. That doesn't benefit you. I do know rents are going up. Just locally here, a friend was telling me his rent's going up from $1,500 to $2,000 here in the new year. Right there, that's the reason why people go and move, not just because they can't write off as much. For the marginal buyers, that might have an effect. One good thing we've learned that the capital gains deduction or exemption for homeowners that have been in their homes two of the last 5 years. That has remained untouched in the tax reform. So that's something that was going to be a little dicey, but that's staying. So that's some good news for everybody. Hopefully we'll see some strong growth out of the economy, and perhaps we'll have another couple years in a price growth of the market, the real estate market in particular. Other than that, I want to wish everybody a Merry Christmas, Happy New Year, and please reach out if you have any questions, and happy to work on your strategy for home ownership or investment properties. The investors are still going to make out like kings, I think, with this tax reform. Happy New Year, Merry Christmas.